I want to talk about algo trading because that's the new buzzword in this modern world.
The basic steps on how a person can start algo trading.
Yeah. Do we have, can we see that your document? If suppose you are the broker, I have an account with you,
Right.
where do I get access to that API doc? Is there any marketplace where we can get coders to make algo trading strategies? What do you think about the regulatory framework? Where do you think, because you are part of a lot of committees also with the regulator, so feel free to share with us whatever you can. What is happening there? Is there any proper regulation already or expected in this domain? फेस टू फेस के एक और वीडियो में आपका स्वागत है. आई वेलकम ऑल ऑफ यू फॉर दिस स्पेशल फेस टू फेस वीडियो. Friends, in this video, I'm going to talk with an expert who is owner of a broking firm. I specifically requested him to come down to Calcutta and talk to us about a lot of issues which are very relevant for trading community in India. Yes, what do we face? As a trader, what do we want? We want access to quality softwares, we want access to Zabardast technology, we want access to next level trading tools. So today we have a guest who I have already recorded one face-to-face earlier, and I requested him to come all the way from Bangalore to Calcutta to record this one. Let's welcome again Tejas. Hi.
Hi. Thanks for having me, Vivek.
Thank you, Tejas. So Tejas, thanks. That video which we recorded in Goa, that went pretty good, and people really like you after that video.
I'm glad they do.
Yeah.
I do face, I'm usually on the receiving end of a lot of criticism.
No, I don't think so. I have not heard many people talking negatives about you.
Well, yeah. Then I think we've been doing our job well.
Yeah. I think as a broker, as a preferred broker for active traders, trading community, that's what your audience is. People who want to be very active in trading, they prefer you, right? I think you have done a very good job.
Thank you.
I must appreciate. So thank you for coming down to Calcutta and talking about these important topics. Many traders who are associated with me, they were asking me that, why don't you call a broker who is into pure tech-enabled solution to know more about these 2-3 aspects which is relevant for their survival. Because it is also about survival these days, no, as a trader. If your tech is down, if you don't have access to quality tech and so on, then you don't know where we are operating. So let me start my question straight away.
Sure.
If you can give us an understanding that how the entire tech architecture of financial market works from a broker's perspective.
Okay. To begin with, I will say that everything revolves around the exchanges. So they are at the epicenter of everything that happens in a trader's life and in all the other stakeholders' life, including the broker.
Okay.
And the brokers have their tech stack, which helps the traders to interact with the exchange.
Okay.
Now, the tech stack is not as simple as most people think. There are many layers and many redundancies, and it passes through several layers in order for between an order being placed and receiving a response. It has to go through several hops.
Right.
And I'd be happy to explain exactly how it works based on how you want me to take it.
Yeah, so let's divide the tech stack. So we'll go to the exchange later. We'll just go back to your setup. So let's divide the tech stack into 3 parts. One is the software, right? The other is the hardware. And the third is connectivity. Because the software and hardware should communicate with the exchange server through a connectivity, right?
Of course.
So let's talk about the software first.
Okay.
So softwares of every broker, is it a common software or common software architecture, or every broker has a unique software architecture?
I think there are different kinds of architectures. However, speaking of the softwares, there are a few softwares that are used widely by very many brokers.
Okay.
There are a few options, and those are widely used by all the brokers. And the way it works is that they are installed on-premise, located in data centers within India.
Okay. Okay.
They may be located in any part of India, not necessarily in close proximity to the exchange.
Which is NSE co-location.
Yeah.
So it's not mandatory that all the brokers will have their software installed in NSE co-location.
Most brokers' servers are not in NSE Colo.
Okay. Okay.
They are away from that.
Okay.
And from a retail trading perspective, it doesn't make any difference where they are located, is because the latency is too low for it to make any difference.
Okay. Fair enough.
Because in the blink of an eye, they can so let me say it differently. 100 millisecond latency is actually more than enough for a retail trader.
Right. Right.
Going below that does not add any incremental value.
Right. Right.
So in any case, they are installed in data centers, and these data centers can be located anywhere, but it is mandatory that they be located in India.
Okay. So when you install your software in any data center, obviously you use a hardware where the software is installed.
Right.
So is there any unique, setup of any broker with respect to hardware, or you think hardware is pretty much the same with everyone? There's nothing innovation you can do, especially when you're talking about being a retail broking setup. Is there any uniqueness which can be introduced there?
Yes, there can be uniqueness introduced there, and there usually is.
Oh.
Now, the key thing about being hosted on-premise within a data center is that the scaling happens vertically.
Okay.
So in such cases, the server capacity matters.
Okay.
And the larger a broker, the higher the server capacity needs to be.
Right.
But that is not necessarily the case if they're hosted on the cloud.
Okay.
Now,
Okay.
speaking of the order management system software, those are installed on-premise, located within data centers within India.
Okay.
Right?
Okay.
And these the servers that these are installed on have to be of a high capacity, because they have to be scaled up vertically.
Got it.
And they cannot be scaled up on demand.
Okay.
It requires real-time monitoring and proactive planning.
Okay. Okay.
And so that's how it works for order management systems.
Okay.
But beyond that, there does exist a layer, which is the cloud infrastructure layer.
Okay. Okay.
On the cloud, the scaling can happen horizontally.
Okay.
What that means is, instead of having a large server capacity like it is on the OMS, on-premise installation, on the cloud, you can scale horizontally through multiple servers.
Right.
You can launch servers instantaneously on the cloud, and that helps to reduce the load on the OMS servers.
Right. Can OMS be there on cloud as well?
No.
Or no?
No.
So cloud server is used for non-trading activities, which could be position management, back office,
exactly,
RMS, right?
Yes.
But the core trading is happening in that OMS server, which is order management server, right?
And that server communicates with another layer, which is hosted on the cloud.
Okay.
Which has yet another layer that the customers interact with.
Okay.
Through a load balancer.
Okay.
So there are various layers which most people don't know about.
Right.
Yeah.
So that means there are hops of dependency. So your load balancer is interacting, your OMS server is interacting, your cloud infrastructure is interacting. So any small issue in any of those components can create disturbance in communication between you, a customer, to the exchange, right?
Yeah. Like they say, a chain is only as strong as its weakest link.
Yeah.
And that is most relevant in our industry.
Right.
We are dependent on a lot of different services.
Right.
But we do our very best to make sure that we are proactive.
Right.
And we often assume that there's going to be a failure.
Okay.
And we architect in such a manner that we can handle that failure if and when they do occur. Now, how do we do that?
Yeah, that's a big question because that is something with the entire industry is asking these days that if there is a failure, why an alternative is not ready at that point of time? Can there be a system which can preempt a failure?
There we have many real-time monitoring systems. We have dedicated teams to potentially identify issues, which I will delve into subsequently. But I want to tell you about the tech risks, which is part and parcel of the business, starting with how we handle it at the OMS piece. We have a built-in redundancy
Okay.
with a disaster recovery site running in parallel in a different geographic location. So if we have a data center, if we are located our OMS in a data center in Mumbai, we have a parallel instance in a DR site in a different seismic zone in Chennai, for instance.
And that's getting real time updated? Both the servers are in sync
They
on
are
real time?
built for a seamless switchover.
Okay. Which
And
will take a couple of seconds if
which
things
could
go
take
wrong.
a minimum time.
Okay.
It's difficult for me to say exactly how much time it would
Okay.
take.
Okay.
But you will be surprised to know that very few platforms have a DR setup.
Yeah.
Although it is going to become compulsory
Okay.
by regulatory mandate for the so-called qualified stockbrokers.
Okay. Oh, so there's a separate category of stockbrokers which probably are of economic significance because of their size. That a regulator may push that no, you have to have a DR
So
also.
it is a function of both size and volumes.
Size and
Size in terms of the quantity of customers
Yeah.
and the trading activity.
Got it. Now let's go back to software once again.
Sure.
This is very interesting discussion. I'm loving it, and I'm sure all our learners who wanted to understand this tech are also finding it interesting. Software, OMS. Can you go a bit deep? Whatever you can share with us. I'll prefer you to share a lot of things, but that's okay. It's certain things may be proprietary, so I don't want you to be very open with them. OMS. What is an OMS? Is this your own proprietary utility you have built, which is connecting with the exchange, or generally OMS is borrowed OMS from some other vendor, and again there is a dependency on the vendor for such kind of an activity?
OMS is the most mission critical software in the brokerage industry.
Okay.
It enables people to place orders on the exchange. And because it is so important, almost all brokers, if not all, rely on well-established vendors.
Okay. Okay.
Now, we do too.
Okay.
However, we also do a lot to ensure that the customer's experience is customized. And
Okay.
so over and above the order management system software, we also do a lot to ensure that how the customer interacts with that software
Yeah.
is different. Like
Right.
the app that a customer uses
Yeah.
is interacting with the OMS in turn.
That's true.
So the efforts that we put is how we handled the OMS at an architectural level
Okay.
to minimize outages,
Okay.
and if and when they do happen, ensure that we have a fail-safe mechanism
Okay.
to minimize disruptions.
Okay. So, I mean, more of an analogy that there is just like in our house, there are plug points. So, OMS is kind of a plug point which is there for everyone in the same way. It's just that how do you fix that socket, which is your probably mobile app or your web version of your trading system, or you also provide TradingView transactions. So, people can actually transact using TradingView in your platform. Ultimately, all these front-end interface talks with the OMS.
Not directly.
Okay.
So it goes through a middleware which we have built.
Okay. And what is that?
And so we
middleware called?
handle most of the heavy lifting in the middleware.
Okay. Okay. So you don't want OMS to get exposed to so many front ends, right? There is a middleware which takes care of any optimization which is required
Yeah.
for the trade orders or any order which is coming into the system.
Right.
That is proprietary.
Think about it like this. The OMS interacts with our middleware through an API.
Okay.
And through an API, our front ends are connected.
Okay. Let's
Is that complicated to
no,
understand?
that's very simple, and let's make it more simple. That's my role. Let's talk about API. What is API? Let the world understand this concept of API, because now everyone is talking about API. A normal learner, normal person may not know the description about API. What is an API?
It stands for Application Programming Interface. Basically allows a user to connect with our trading platform
Okay.
without going through our interface.
Okay. So if I have some software which I've developed,
Yeah,
and if I can write a code
right.
in that software which is in sync with the API which you have provided, I can talk to your middleware or OMS. Which one? Middleware?
No, you can. So the thing is, we make all our services, or rather most of our services, available through API.
Okay.
Whether it is to do with placing orders, trading,
Okay.
whether it is to access market data feeds,
Okay.
all of that can be made available through the API and are already available through the app and web,
Okay.
right? So the app and web is what most people use for trading. But those who don't want to use the app and web for trading, and who want to automate their trade, for instance, can use it through the API, use our services through the API.
Got it. So can I make a presumption that your app and your web is technically using your API to connect with your transaction service,
Exactly.
which is your middleware?
Yes.
Got it. That's interesting.
So whatever we build is mostly API driven. And so what you said is very relevant to what we do.
So every component has its API, and they are talking to each other, and that creates that entire universe of, the entire ecosystem which you have created. Right?
You're right.
That's very interesting. So for some people it may become technical, but it's a very important discussion. Everyone should know this. In fact, I recorded a video on co-location, that how the machinery works. This is a very important video to continue.
By the way, speaking of co-location, we are also co-located.
Oh, you are also there?
Earlier, I said that co-location is immaterial for retail traders.
Yeah.
Well, it is immaterial, but for those who want to do HFT, for instance, or to whom latency matters a lot, we host them separately in Colo.
So do they need to pay separate cost for that Colo? Because Colo is expensive.
That's a different
right?
module, and of course has different commercial implications as
Okay,
well.
so that means anyone who is very active, who's trading probably 1,000 or 2,000 orders a day,
Or much more.
or much more, can actually connect with you and get a co-location server for themselves.
That's right. Yeah.
That's very interesting. That's a unique offering. I don't know whether other brokers are offering it or not. I'm not tracking other brokers per se, but that's a very good initiative if you have taken it.
Yeah, it's mostly useful for trading firms and who do trading as a business and who are competing on time.
Yeah.
Right. Co-location is only useful for those who are competing on time.
Yeah.
It's not for those who are competing on ideas.
On ideas, correct. I mean, that's what we do as a prop trading firm. We have co-location, we have multiple racks. The fact that you are also giving, that makes me quite worried now.
Not really.
Because that's the advantage which we have. Now that is also getting democratized by people like you. Anyways.
Well, there are very different kinds of use cases and very different types of traders and trading firms.
Yeah, of course.
So
I'm just kidding. Yeah. So let's go back to software again. I'm going to spend a lot of time there.
Sure.
Please don't mind. When any broker is developing an application which a retail investor is looking at, right? So there are two kind of applications. One are very simple one-page application, not much heavy loading there. And there are other category of applications where there are a lot of research, this, that, which is more traditional brokers-driven applications, right? Very heavy.
Could you
say, for example, they
elaborate
give
a
you
little
research, they give you fundamental data, technical data, a lot of heavy lifting inside the app, which technically helps people to take a better decision, right? Whereas the app, I've seen your app, it's a very simple app. more focus on transaction.
Right.
Does it make any difference if the app is simple interface, simple, or doesn't matter? Even if you add more features inside the app doesn't become heavy. It's okay.
It depends on how it is architected ultimately.
Okay.
Now, initially, our app used to be simple and transaction focused only.
Yeah.
It continues to be transaction focused, but it has evolved. Over a period of time, we realized that research and execution can happen efficiently on the same platform.
Okay.
However, it is important for us to make the most useful data available for well-informed decision making.
Right.
And so we do that without really compromising on the performance of the app.
Okay.
It is possible.
Okay. So technologically it is possible. So that's okay. That point is clear. Now let's go forward a bit. Now your interface I've understood, your OMS I've understood. Now let's go to the exchange part. Now exchange OMS, that's also called OMS, which is interacting with your OMS.
Yeah.
What is that interaction like? What is that journey? What is that structure?
Exchange has APIs.
Okay.
And they, all the trading platforms, OMSs, interact with the exchange's APIs.
Okay.
Essentially, that's how it works.
That's, pretty much the same thing, like an
It's
API.
pretty
to
much
API.
the same thing. They have their own protocols,
Yeah.
which of course everyone else has to follow.
Okay.
And theirs is a more bare bones because they don't really have to deal with all the data analytics and all of that stuff that the trader requires to make decisions.
Yeah. Yeah.
Over there, it's mostly order matching.
Okay. And the order matching are defined that these are the kind of orders which I'll receive. I mean, say I'm the exchange and you are obviously the broker. So I will tell you that, listen, I'm going to accept this from you and I will give you this in return. Don't send me anything beyond that. Is that?
That's right. Yeah. They don't want to do more than what is required.
Okay.
To facilitate trades in the most simplistic terms.
Got it.
That's exactly what happens on the exchange.
Why I ask you this question, I'm going to tell you that there are different category of orders which is getting innovated these days, GTC and lot many orders. So when a broker is offering any category of orders, I mean, you can actually define what are the category of orders you are giving. Is exchange allowing you to give those orders, or you are innovating for your OMS and you only send the instruction to the exchange when the order gets triggered?
It can happen both ways.
Okay.
There are some orders which require exchange approvals. For example, a bracket order is an exchange approved algo order.
Okay.
It's an execution algo order type.
Okay.
Which has to be approved by the exchange.
Okay.
But there are very many order types which can be innovated and deployed at a client level.
Okay.
But as long as they follow the basic criteria that an order requires when it is sent to the exchange. For example, GTC order, like the order cancellation part of a GTC can happen at a broker's exchange, at the broker's level as well.
Okay. Okay. So you can keep the order in your server, and when the cancellation will get triggered, you will send the instruction to the exchange.
Right.
Got it.
No, so the thing is this, the exchange has their predefined protocols. As long as the innovated order types meet what is required by them, it's okay. But if it doesn't, then it's not okay.
So now we understand a bit about the tech part now tell me why the problems happen. I'm not saying that problem happens with you, but generally I'm seeing, obviously larger the broker, the problem gets magnified because so many people are using a broker. So let's not talk about a specific, your firm or any other firm. Why the problem happens? Why suddenly order stops? Why suddenly the information which you are getting on the terminal becomes so erratic?
Well, that can happen for various reasons. But I will speak mainly starting with data. Uh, but before that, I would like to say and reiterate on what I highlighted earlier, that a chain is only as strong as its weakest link. And because information passes through various layers, and because we are dependent on exchanged lease lines, and which are also vulnerable to disruptions and outages. So very many times they tend to be the causes. Who is to be blamed? Really can't say, but I mean, to some extent, it can be telecoms, or it can be those that manage the network infrastructure. But these are dependencies that trading platforms cannot avoid. And so the best we can do is to try and build in redundancies by having backups. And in our case, multiple backups, high capacity, multiple backups across the primary center and the secondary DR site as well, just to make, and with auto failover switches and so on, which help to minimize disruption to the best possible extent. That's one. That's the lease line bit of it. But applications can also go down, right? They can go down if the usage has spiked suddenly. And so that has to be handled differently. It can also happen because of some kind of overload at an API layer. So the thing is this. It is very important for a trading platform to, number one, understand technology, to be proactive rather than reactive, and to pay attention to things from the ground up, and architect their platforms assuming that they are going to fail. How does one react if and when the platforms do fail is more important than just building it assuming that it won't. Because most platforms, I think, in my opinion, are built with the assumption that they are going to function perfectly, which is in the ideal world possible, but in reality, a lot of shit can hit the fan.
So can we make an assumption here that as a user of any platform, you should be mentally prepared that it can fail any moment? Because the problem is the customer also make that presumption that why is it failing? It should not fail.
Trading is mostly about risk management. And so while as a trading platform, we manage risks in many ways, a trader should also manage his risk by having a backup account.
Correct.
It's very, very essential.
Yeah. I mean, just like you may actually, suddenly your internet may stop functioning for reason not in your control.
Yeah, it can happen because of that too.
Yeah.
And most of the times, these days especially, much of the trading has now shifted to apps.
Yeah, yeah.
Like a few years ago, most people used to trade through trading, like the web interface. But now 2/3 of the trading, if not more, happens through trading apps.
Okay.
And the connections, even a slightly unstable connection can lead to problems.
Right.
Which often does. And users do not realize that it's because of an internet connectivity issue at their end and not necessarily because of a platform outage.
So why is industry not transparent with everyone? Why aren't you guys just like we have transparency in price discovery, everyone knows why the stock is trading at a particular price because there's a demand and supply and people can see the top buyers and sellers.
Yeah.
Why is the industry not transparent and telling people where the error happened? Because the problem which I see in Twitter is that people are saying all kind of things, but then the response from industry at times is very lukewarm. You don't want to come down and say that this exactly is the reason why this happened.
I think it's because of human nature. Just like in any area of life, we hide our deficiencies because we want to appear better on the outside and be perceived in a positive light. It has to do with that than anything else. Today there is no central repository where all traders in India can access a portal which highlights the downtimes across different brokerages.
Right.
There ought to be one. We are in 2024.
Yeah.
Recently, when the markets were kept active on a Saturday unexpectedly,
Yeah.
and the subsequent Monday turned out to be a holiday because of the Ram Mandir inauguration,
yeah.
that led to widespread disruption among large trading platforms. And although, by the way, we had zero issues on both days and after that.
Okay.
But the key thing I want to highlight here is because there was a lack of awareness, I think the entire industry faced a type of backlash on social media stating that many trading platforms are down, including ours, which was not true.
Yeah.
And so to address that, we've, as you know, have always tried to be as transparent as possible. And we've done something. In fact, we launched a FIRE's status dashboard, which allows our customers and the public to see if our platforms are working, if there have been any outages, or any issues in the past. We also publish a 90-day window for incident history, if and when issues may have occurred.
Yeah, you told me about it, and I want you to show this.
So this is a status dashboard which shows if our systems are operational on a near real-time basis. When I say near real-time, it is within 2 to 5 minutes
2 to 5 minutes
of any issue having occurred on the platform.
Okay,
if
that's
any.
why it's 99.97, this one here.
Yeah, so let me explain this.
Yeah.
This is divided into various services and components, but it only covers the mission critical aspects and the most important things that traders need to track on the platform. The first one is trading. In trading, we further subdivided into 2 categories. As you can see, the first one is trading via web and mobile. What it means is trading operational on our trading apps, which is the FIRE's web app and the mobile app. 100% uptime, of course, means that there have been no issues for the last 90 days. Subsequently, we have a separate category for APIs. Why a separate category? Because in the middleware, they are handled differently.
Okay. Why are they handled differently? Because there's a lot of orders?
It's a different use case.
Okay.
So we handle it differently.
Okay.
There are rate limits and whatnot. So for example, our API has a rate limit of 10 per second,
Okay.
200 per minute,
Okay.
and 10,000 per day.
Okay.
It's probably the highest in India.
Rate limit is what?
Number of requests you can make through the API.
Okay. That is valid for all the brokers? Everyone have limit?
No, this is what we have built for our customers. I really don't want to comment about other brokers because most of their API offerings are powered by vendors.
Oh.
That's right. So trading is one component. Data is another. We've subdivided into 2. The first one showing real-time data. Real-time data is your second-to-second market data feed that you receive across all symbols and instruments, across segments such as equity, futures and options, etc. Historical data shows you the uptime for intraday historical, which you can see on charts, and end-of-day historical since inception. So essentially, whatever you see on charts, is that accurate or has there been any issue can be tracked here. We also show if the login module is operational. We have most of them are above 99.9% uptime in the last 90 days, as you can see. Here too, we have divided them into web and mobile and API because the API login flow is different. Most importantly, the exchange connectivity. Here, we have a separate bar for each of the exchanges. And if there is, you will see if there are any issues by hovering over a differently colored bar. Like for instance, here on the Feb 2nd, there was a partial outage which lasted for about 26 minutes.
Oh, what do you mean a partial outage?
There was a partial outage, which means that it was an intermittent order rejection issue at MCX.
Oh,
The details are further available.
that's interesting. So suppose someone lost money because of this. What do that person do? Any legal recourse to take the money from exchange?
Well, usually when there are outages, the trader approaches the investor grievance redressal cell
Okay.
and files a complaint, usually against the broker,
Okay.
asking for either a clarification or a refund, which in most cases is not appropriate because there are very many risks in trading, which and an internet outage is part of it.
Okay.
And so yeah, there is a dispute resolution mechanism at the exchanges, and which can also be addressed which can also be challenged via an arbitration.
Okay.
And so that generally happens. If it is against the exchange, that can also be handled.
That's it. So there is a proper process which can be followed rather than.
There is a very well-defined process by every exchange in India.
So stop shouting on Twitter, guys. If you really are having any problem, please send an email. Use that method. Use that window to file your complaint. There is a habit of just.
They also get resolved very quickly. The exchanges have prioritized dispute resolution, and there are well-defined timelines also. So
this is very interesting. I think you are the first one or the only one with this kind of a.
Yeah, we really wanted to do this because I think we are in 2024 and traders ought to know on time if there are any issues with the trading platform so that they can manage their risk more effectively. Here we also publish past incidents across any and all types of issues that we may have faced for the above mentioned services.
That's interesting. Very, very good. I'm sure that people who are user of your platform will find value, especially the traders who are very active here. Now, I want to change the tangent a bit because now we have talked about tech and connectivity, etc.
Sure.
I want to talk about algo trading because that's the new buzzword in this modern world. That's what we also do as a prop trading firm. And I know that you're going to democratize that also. That makes me very scary, but what to do? So let's decode algo trading for everyone.
Sure.
A to Z of algo trading and how to begin. If you can take example of your system, I'm okay if you want to do that. Or just give a more academic understanding of how algo trading works and what should one do if one want to get into it.
So I will start by saying that algo trading is already democratized.
Oh.
And we contributed to a great extent in 2019 when we offered our trading APIs for free.
Okay.
And very many retail algo traders who did not have sufficient funds to pay heavy fees to access APIs were able to experiment, learn, and deploy their algo strategies. But I must admit that although they are democratized, there is very little awareness about what algo trading is like.
Okay.
Because the very word algo arouses a type of a complicated feeling.
Yeah, it does.
Within most people.
Yeah.
And it doesn't have to be like that. And the reason is because if understood from a different context, I will help you understand by maybe using two different analogies. I mean, when I mean you, your viewers.
No, I'm the representative. Don't worry.
Just so that they know what it is and what are its use cases. The first analogy is the analogy of a driver. Imagine you have a car and you are used to driving it everywhere you go. That leaves you with less time because you have your hands on the wheel and you have to navigate the traffic to reach your destination. This is akin to discretionary trading. It's like when you place orders on your own, track the markets through the day, and manage your risk. Hiring a driver makes your job simpler. You can tell him to drive at a certain speed. You give him a map to follow. You also tell him not to skip any signals because you don't want to face certain types of risks and police challans. And you can also ask him to start and stop based on your predefined instructions. Right? You want him to stop in front of a building where you want to get off for 5 minutes and get back in at certain points. And the driver does exactly what you have instructed him to do. Right? Now, using this analogy, the algo trader is like a driver.
Got it.
Right? And as a trader, you have created a set of instructions which it will follow. In this case, the person will follow to act on your behalf to achieve your objectives, to reach your destination and milestones. This is the first analogy. And I hope that this makes it simple for people to understand that algo trading is not hocus pocus. You don't have to have a PhD in artificial intelligence to deploy and to learn and deploy your trading strategies. If you think that this is useful to have a driver, then perhaps algo trading is for you. Because when you have a driver, you have the luxury of sitting in the back seat, maybe reading a book, enhancing your knowledge, speaking to somebody that matters in the limited time that you managed to save for yourself.
That's interesting. So if I have to communicate with my driver, simple language for me is my native language, right?
Right.
But when it comes to your software, my driver should know your language, right? That's API.
No. So the language is, for example, Python is a programming language in which you set your instructions.
Okay.
Right.
So Python is a programming language.
Python
just like
is
Python, there could be other programming languages.
There are various programming languages.
Yeah.
Python is very widely used.
Okay.
And there are others, C, Java, .NET, etc. But yeah, what's most important here is that algo trading allows people to free up their time and enable the machine to act on your behalf and achieve your objectives. And that's all there is to it.
And this is legally allowed?
Of course, it is legally allowed. There are thousands, if not lakhs, of algo traders in India.
Okay.
The adoption is increasing slowly but surely.
Okay.
The main reason that it is slow, the adoption is slow, is because there is this lack of awareness.
Okay.
Let me, if I have some time left, I want to also use another example, another analogy to explain this. Let's use cricket. How about that?
Perfect.
Okay. So, a cricket team captain has the luxury of creating a strategy to bring all the players of his team together to win in a certain match or tournament, right? Essentially to achieve their objectives as a team.
Right.
Now, he decides who goes opening batsman. He decides who bowls at which part of the game. Why? Because he understands the dynamics of the game and how to react to these dynamics differently based on the situations. Now, think of each player as a different type of trading strategy. All right. So, and think of the marketplace as, think of the stock market as the game, in which the dynamics keep changing all the time. So, the cricket captain is reacting and planning how to win this game, and he is deploying his teammates, in other words, trading strategies, to make the most of the prevailing situations. So if he is able to do that properly and efficiently, he achieves his objectives of winning the game. So if one is running, say, 10 or 11 trading strategies separately, ultimately the discretion of deploying and running those trading strategies, allocating capital, managing risk, still lies on the trader, aka the cricket captain. And so that's how it works.
So a cricket captain, that's me, and I have 10 strategies, 10 players. How do I decide that at this market condition, I need, or in this match situation, I need this player to open, or I need this player to do that? Is that process of optimizing or identifying what should be done at this moment, can that be automated?
It can be automated.
Okay. What is that field called?
So let's take an example that most people use. Say there are three scenarios from a trading perspective: a high risk scenario, a medium risk scenario, and a risk aversion or a low risk scenario, right? So you can have trading strategies deployed across three different scenarios based on the underlying risk. And likewise, even as a cricket captain, if the game is going in your favor, then you have a certain way to react to it. That's plan A. If it is going differently, you have plan B and subsequently plan C.
True.
So these three plans are already orchestrated and they're not being made on the go. In all likelihood, that's how it works, even in cricket, as it should work in trading.
So there are different stages of algo trading. One would be a very simple connecting your decision algorithm with an exchange or with a broker through an API and going live. Now, my decision algorithm can also become very complex as we adapt to new technologies of decision making. Like I know for sure that now people are using AI algorithms for decision making, which is creating that optimization at a high level. Let's not talk about that because that is prop trading firms deploying AIs to figure out patterns in the market, and AI is doing all those things. There is no algorithm per se there. But let's talk about a normal retail, or I mean, we are not retail now. Now we are talking because algo is not retail. Algo is like trader.
Yeah, the very definition of retail almost makes it appear like they're uninformed, need excessive hand-holding, which is certainly not the case.
Yeah?
Yeah, certainly not. Like
what's the average size of a typical retail investor or trader?
It varies a lot. Like I would like to focus on the levels of awareness. They tend to be much higher at a brokerage like ours because we are a DIY brokerage. But it can range between 1 lakh and 1 crore.
So a person with 1 lakh balance with you can become an algo trader?
Of course, he can become an algo trader. So money is not the barrier anymore.
Okay. Sure. So how do one start? If I have to start that journey, I'm a BCom graduate. I don't know anything about tech. I'm always worried what will happen to my career if I become a trader because machines are coming everywhere. How do I start this journey of becoming an algo trader?
First of all, Vivek, you don't have to be worried. You least of all the people, you run a trading firm.
So, I means the guys, I'm representing BCom. Simple graduates,
Right.
Because that's what the audience is. Real India is there. People who have come here, they're very simple people And they are worried that what will happen to our future as a trader.
Well, machines, like I said, with the two analogies that I used, are merely executing what you want to do. They're just doing it on behalf of you.
Yeah.
So the machines are a means to an end and not an end in itself. And hence, they don't really, they're not really the catalyst for opportunities dissipating in the market. Let me make that clear.
Okay. Fair enough.
Yeah, so I will maybe take you through the basic steps on how a person can start algo trading.
Yeah.
Number one step is to open an account with a brokerage.
Okay.
And once the account is opened, you then have to create an app, an API app, which enables you with an ID and a secret key. You as a customer can also access API docs. API docs are an instruction manual on how to use the API. Right? It tells you what are the different functionalities you can use it for. And it also provides you with sample codes and makes it easy for you to integrate your trading rationale, which can either be in Python, Node.js, it can be on any other, maybe another platform on which you have coded your trading logic. It helps you to connect with that to execute your trades. That's what it helps you do.
Okay. Do we have, can we see that your document? If suppose you are the broker, I have an account with you.
Right.
Where do I get access to that API doc?
So you will have to go, if you can search for Fire's API on your browser.
Okay.
Yes, if you could open the first link. Yeah. This tells you what you can access on our API.
You can use this mouse if you want. Yeah.
API is mostly used by algo traders and fintech platforms, which are creating products to help algo traders for the most part.
Okay.
So you can access the API documentation here. Our latest version, API v3, we have written a blog about it, which you can read. But let me quickly run you through what it really is.
Okay.
So these are REST-like APIs, which provide you integration to our in-house trading platform and our middleware with which the API will interact with. We have various libraries and SDKs, making integration easier. SDKs are kits. They have utilities, sample codes and wrappers, which make it easier rather than you having to build all of that from scratch. We have a dedicated community where traders can ask us questions about API. They can get their queries answered typically within a day from our team, by the way. So this is not some person who doesn't know about it or a bot that's answering these questions. It's the guys who are involved with building the API and who are integral part of the tech team that handles this stuff. So yeah, this is the best place that you can get your queries resolved. And the rest of it is available on the left-hand menu. You can access it. And, here you can... Yeah, I mean, this will take a bunch of time, but please feel free to
before that,
explore
I
it.
need to know a bit of coding, right? Python or Node.js or a bit. Otherwise, I'll get lost in this page, right?
Well, yes and no.
Okay.
There are people that can do it for you. The most important thing a trader needs to know is how to manage risk and learn how to create a trading strategy.
Okay.
as long as he has a good grip on that, you can get help from a coder.
How? Where do we
There are
get?
so many freelancers available. Number one,
We can search on LinkedIn. We'll find them.
there are. I mean, there are so many out there.
Do you have any?
Maybe I'm biased because I'm in Bangalore, but
Okay,
there are very many of them available in India, and yeah, they can easily help you out to achieve this.
Is there any marketplace where we can get coders to make algo trading strategies?
There are some freelancing websites
Okay.
through which people can get access to such people.
Yeah. So once we have, so we definitely need a coder who can read this document, or probably someone who
If
has
you
already,
don't know how to code, that is.
Okay.
If you do, which many people do these days, if you know how to use Python, then it's very easy. If not, then get help.
Why don't your firm provide us coders who will develop strategies
We
using your
could,
code?
but the use cases are very different, and then it takes a lot of time too. Many times it's a personal relationship between the coder and the trader, because he wants to also modify his trading strategy, and so that requires iteration.
And obviously there is a
And
need
there is
of
an
a
ongoing
secrecy.
cost because there are man hours billed and all of that.
Okay.
And yes, like you mentioned, some traders are skeptical when it comes to outsourcing this to a broker, because the underlying assumption is that they will use it to trade on their own
Yeah.
and steal their secrets, so to speak.
Yeah.
Which I will not comment on, but I don't think it happens.
Yeah.
But for the benefit of doubt of those who think along these lines, we at Fires don't do proprietary trading. We avoided prop trading because we wanted to prevent any conflict of interests that can arise out of prop trading. But in 2024, it is a bit different. But yeah, this is just for the sake of clarification for those who think on these lines.
Okay, great. By the way, guys, in case you want to learn about algo trading quant, there is a company where I have invested. I've been a founder there called Quantinsti. Even they just know about them.
Yeah.
So in case you want to learn about this, if you have that into, then you can check their website, quantinsti.com. And
Well, I would like to say Quantinsti is the benchmark when it comes to learning about algo trading. The course is called EPAT, and in fact, we hire people who have completed the course, and they have very good things to say about EPAT, to be honest.
yeah.
But yeah, I hope that many more traders take up the course. It's certainly very useful.
Yeah, absolutely. So I'm going to send you a link below this video अगर आपको सीखना है तो, because it's a science which will need you a fair bit of learning hat also. Otherwise, it's not a very easy science to grab. But once you have learned a basic, then I think APIs are so transparently available, then you just need to use this API and connect with your server and trade, right?
Yeah.
Is there any prerequisite before trading that so much capital is required? Is there any cost of API?
No, there isn't. So, like I said, capital is not a roadblock, and there is no cost involved. We have and continue to democratize algo trading in India. The use case is very strong, isn't it? Because most people who are earning money don't have the time to trade. It was different during the lockdown years when the trading activity suddenly surged. But now work from home is a thing of the past.
Right.
People are getting back to the office.
Right.
Most of them already have.
Right.
So there is no time to trade.
Right.
The morning rush hours.
Yeah.
And then there's lunch hour.
Yeah.
And then there's barely enough time to catch up on anything. So algo trading has a very strong use case.
And globally, it's a very, very big thing. So what do you think about the regulatory framework? Where do you think, because you are part of a lot of committees also,
Yeah.
the regulators. So feel free to share with us whatever you can. What is happening there? Is there any proper regulation already or expected in this domain?
Regulations are expected, are awaited, and it's keeping everybody on the edge of their seats. Now, the regulator is very rightfully concerned, I think, about algo trading platforms because most of them are unregulated. They are publishing claims which are invalid, not necessarily invalid, but they are not yet validated based on proprietary backtesting results.
We're talking about the return claims,
Yeah.
performance claims.
And so these performance claims are not validated by an independent agency.
Through that.
And so that is concerning because it could be setting the wrong expectation for retail traders. So algo trading can be used as a route to bypass manual intervention for traders,
Right.
with the assurance that, listen, look at the backtested results, which in most cases could have been curve fitted to produce the best results.
Right.
And hence give unknowing, innocent retail investors the impression that because trades are being executed through machines and without human intervention, the results can be better, which is not necessarily true.
That's true.
And so that concerns them. And I think to solve that, they would perhaps like to set up independent agencies to validate these claims and maybe reduce conflict of interests.
Okay, that's good. So all these things are under discussion and we may expect a more clearer picture.
Yeah, so there is a lot of hocus pocus around. Nobody really knows, right? At the end of the day, the regulator has to decide.
Right.
They have been taking feedback from market participants and they are not against algo traders. Like whatever I just showed you is something that individual retail traders can use without being disrupted or without any hindrances. The issue is with unregistered, unregulated trading platforms and marketplaces making these claims which can set the wrong expectations from unknowing investors. That's what it's all about.
Okay. Great. So if you are thinking of algo trading in India, you don't have to really worry that some regulatory restrictions are going to come. No, apparently that is not the agenda. The agenda is to stop the frill characters, fly-by-night operators who are taking advantage of everyone. Great. Tejas, it looks like that we have pretty much covered fairly good quantum in terms of tech, in terms of algo. Is there anything more you want to share? What's happening in the industry? Where do you see this industry going? Anything which you want to share with our audience?
Well, this is a very technologically intensive industry, which requires a lot of proactive action from platforms like us. It requires consistent commitment to investing in people, in newer technologies. And I think what traders must acknowledge is that all of this costs a lot of money. And maybe the fact that the prices haven't moved up in the last 10 plus years could be kind of precipitating some type of, let's say, you get what you pay for. And so beyond a point, I think not paying or rather only prioritizing costs over services can jeopardize the trader because most people might be overtrading and the brokerage could be a symptom. Like the high brokerage that they may have accumulated over a period of time and which they can see in their back offices is actually likely to be a symptom of overtrading. It's not the result of high brokerage prices. So whenever somebody asks me about pricing, I say that, listen, prices have been rock bottom for over a decade. So I think you should not overtrade. And maybe that will help you to not just gain better results, but also manage your risks much more effectively. And I think that's what it's all about.
Not many brokers will use these phrase openly. They don't overtrade because your final money making is dependent on how much people overtrade.
Yeah.
Very honestly.
There are a few other things that we have done to help customers manage their risks better. Recently, we launched something called Smart Exit Alerts. Now, what this does is it allows you to manage your account level or portfolio level profits and losses without you having to constantly monitor and manage your positions actively. So, for instance, just like how for a certain trade you can set your predefined profits and losses, but for retail users there was so far no feature for you to do that at an account level. So, let's say on an account size of 10 lakhs, you're up by 1 lakh. You could be down 1 lakh a few minutes later because of the mark-to-market fluctuations, right? And so what Smart Exit Alert allows you to do is it creates this alert when your desired levels of profits have been triggered at an account level, or maximum tolerable stops losses have been triggered on your account level as well. So using those alerts, you could exit all your positions in your portfolio.
And there is a kill switch where with one click I can exit all?
Yes, exactly.
Wow.
So the concept of a kill switch is limited to just, it's mostly a pseudo-psychological feel-good factor to switch on and off your trading activities. But a Smart Exit Alert also has built-in trading functionality in it. So that prevents you from being glued to your app and allows you to exit all your positions when your predefined conditions have been triggered.
Okay, that's fair. So you keep on innovating like this, Tejas. I visited your Bangalore office. And it was quite impressive, the work you have done. Your brothers are involved in the journey which you guys have created. So I'm wishing you best of luck for all your future endeavors and new creations for this beautiful market.
Thanks, Vivek. Also, what you've done over the years is inspiring. And thanks for having me here. It was a pleasure, as always.
Thank you. Thank you so much. Thanks, guys. So ये था Tejas के साथ बातचीत. Yes, it was in English because I told Tejas to use few Hindi words, but he didn't because he's very comfortable in English. That's how it is.
I'm a Bangalore boy. Can't
You're
help
a
it.
Bangalore boy. Absolutely. So, guys, I think I generally don't recommend or promote any broker. I want to make this thing absolutely clear that Tejas has not paid me money for this interview. Yes, Fires has been part of our knowledge journey by becoming sponsors of the events which we conduct on regular basis. But there is no commercial transaction which has happened for this interview with him. I loved their approach towards market. I requested him to come down to Calcutta and record this very important video for the industry, which will give transparency to everyone. In case you want to open an account with them, there is a link which I'll give you below this video. You can open an account or you can do whatever you want to do. But I think it will be good to see you guys progressing as a trader. And broking firms like Fires have done pretty much everything and innovating new things for you to become a sensible trader. Thank you for watching this video. I hope you stayed till the end and it was a learning experience for you. And I sincerely hope that you will remain part of this face-to-face journey with me. Thank you. Bye. Take care.
Investments in the securities market are subject to market risks. Read all the related documents carefully before investing.